What if the thing that's been holding you back in trading isn't your strategy, but your thinking? Because your brain is wired to chase excitement, not consistency, most people approach the market this exact same way they approach a casino, with hope, emotion, and adrenaline. But successful traders, they think completely differently from everyone else. And today, I'm going to show you the exact mental shift that separates traders who generate steady monthly income from traders who are constantly blowing up accounts and starting over. Most people don't lose money in the market because they pick the wrong stock. They lose money because they think about trading in a way that sets them up to lose before they even place the trade. Poor traders try to double their account quickly. They want fast returns. They want big wins. And they want to feel like they're right. So they chase hype. They follow alerts, jump into plays that they don't even understand. And then they buy short-dated options because they move fast. They're trading for the rush, not the result. There's a study from UC Berkeley that analyzed over 78,000 trading accounts. And what they found was simple. The more often a retail trader trades, the less money they make. And the Journal of Finance published research showing the average active retail options trader underperforms the market by about 6.5% a year. Not because they're not smart, but because they're approaching the market with the wrong mindset. They're chasing possibility instead of probability. Successful traders, on the other hand, think in terms of consistency and risk management. They trade like business owners. Their goal is not to win big. Their goal is to win often. They ask one question before entering any position. How do I get paid even if I'm wrong? This is the biggest mind shift that changes everything. When you buy options, you're fighting against time decay. Time is literally working against you. Every minute that passes, your position loses value unless the stock does exactly what you want in the time frame you want and with the magnitude that you want. You're stacking multiple layers of uncertainty against yourself. When you're selling options, time is working for you. That's why professional traders sell premium. The CBOE has shown that 70 to 80% of options expire worthless. In other words, the majority of people who buy options lose, and the people who sell options win. Rich traders sell time. Poor traders buy hope. And I want to show you exactly what that looks like with a real example. Right now, Amazon is trading around $225 a share. Most retail traders look at this and say, I think it's going to go up. So they buy a short-term call option trying to catch the move. For example, someone might buy the $240 call that expires soon. That option cost about $315. And even though Amazon only dropped a couple of percent today, the contract is already down more than 20% in a single day. That's time decay destroying the contract from the inside. Now let's look at how a successful trader approaches the exact same situation. Instead of buying the call, we sell a cash secured put. So we sell the $210 put expiring December 19th and collect $5.75 per share, or $575 up front. Our break even is now around $204, not $225. And our probability of profit on that trade is around 74 to 75%. So here's what happens. If Amazon stays above $210, we keep the full $575 and move on. If Amazon falls below $210, we get assigned the shares at $210, but our effective cost basis is closer to $204 after the premium that we already collected up front. And then we turn around and sell covered calls on those shares to generate even more income. So in one scenario, we get paid. In the other scenario, we still get paid and we acquire shares we were willing to own anyway at a discount. This is what I mean when I say rich traders get paid while they wait. Poor traders pay while they wait. This is where consistency comes from. This is how you stop trading with stress, stop gambling, and start building income that compounds. And I'll tell you this, early in my trading career, I was addicted to the big win. I thought one good trade would change my account, my situation, my confidence. But it never did. The big wins didn't change my life. The consistency did. The day everything changed was when I stopped asking, how much can I make? And I started asking, how can I get paid even when I'm wrong? That one shift is the difference between trading to impress versus trading to provide. Trading for dopamine versus trading for freedom. Trading emotionally versus trading with intention. Once you make that shift, your entire relationship with the market changes. And if you want to see the trades I'm actually making in real time, get my checklists, and be a part of my private trading chat, the link's in the description below. That's where I share everything that I'm doing inside the market. Trade safe, stay consistent, and I'll see you on the next one.